Get ready to take a flamethrower to the official narrative and learn what the elites don't want you to know. You're listening to The Tom Woods Show.
Hi everybody, Tom Woods here. It is episode 2631 of The Tom Woods Show. I am not in my natural habitat. As you can see, I'm once again in a New York hotel, which once again is about one half a notch above a Senegalese prison. But all the same, it's what I have. And I'm joined by the great Dominic Frisby, who is well-dressed, has his beautiful traditional background behind him. As you know about Dom, he's a jack of all trades. And normally, a jack of all trades does a whole lot of things at a very mediocre level. But Dom does a whole lot of things at a very high level. But the particular thing we're talking about today involves his insight into business and financial matters. And I recommend that you get his newsletter and follow him, and follow him in general, not just for his advice, but also because he's one of the most interesting people I know. So we'll give you information about that in a little while. Dom, welcome back to the show.
Well, you're very kind, Tom. You always give me the most flattering introductions, so thank you very much. And you've rubbed me up the right way.
Well, glad to hear it. All right. Well, I want to talk about, you wrote a very, very long, well, I mean, maybe by the standards of the Flying Frisbee, a somewhat long piece on the Trump tariffs and what the vision behind them is, and maybe what people should do in light of them, and what Trump is likely to do. Is he likely to back down? Is he going to press forward? All this stuff is in here, and it's the result of your sifting through and reading an enormous amount of material on this subject, try to get to the bottom of it. Now, just the other day on this show, I had something of a debate on the subject between two people who looked at things somewhat differently. And here, we're going to be covering some of the same ground, but not entirely. But even if we did, on social media, Dom, I often go to get ideas for my email newsletter. And it's, as I don't know if maybe it's different over in the UK, but in the US, it is all tariffs. That is all people are talking about. And so I feel like if I do a couple episodes on this, it's not a problem, because it is on everybody's minds right now.
Well, Tom, I think it's going to be one of the defining economic issues of our age. I think it's a huge subject. And in the same way that globalization and free markets and so on has been a subtext of the economic debate for 30 years since, the opening up of China in the 80s and 90s and so on, I think this will dominate conversations for a long time. So that you've allocated 2 or 3 episodes to it, I wouldn't worry about it. I think it shows great foresight.
Oh, well, that's very kind of you to say. I mean, I did do an awful lot of episodes on COVID, but again, how could you ignore that? How could you move on to whatever the next thing was? That was the next thing. So what we're going to do in this episode is, I guess, not so much talk about the merits of tariffs, or let's say the theoretical argument for free trade. I've covered that, and I think more what we want to try to get into, because a lot of people are doing that, is instead understand what the motivation behind these is, whether it's misplaced or not, what the motivation behind these is, what's likely to happen, and what moves somebody ought to make in this situation. So in your article, you start off by giving some stats, which, a day later are out of date. But by the time, at the moment you were writing it, this is where various stocks were, this is where gold had gone, this is where Bitcoin had gone. So right away, there's been a hit to stock markets around the world. But as you point out, neither Trump nor his supporters seem to be particularly concerned about that.
Well, it's very easy to start arguing about policy. This policy is a good idea, this policy is a bad idea, and everyone has their opinion. But ultimately, Donald Trump doesn't read my newsletter, and I don't think he's going to listen to some lowly English blogger, and he's not going to come to me for policy advice. So I can sit there going, tariffs are good, tariffs are bad. I may as well just howl at the moon. I think the point we have to take away from this is that tariffs are here to stay. Donald Trump is not a man who backs down when he gets on an idea. He's a strong man, and he will have thought about it. There's this sort of notion goes around, all those who would criticize Donald Trump, and they go, oh, they're really stupid. He hasn't thought it through. Donald Trump's been thinking about this for 40 years. He was talking about this 40 years ago. You can find old clips of him being interviewed on Oprah and so on. He has been really concerned about the deindustrialization of America. And in the same way that, I think about my newsletter late at night and my business and all my interests, and I'm sure you think about all the things you're up to, with every free thinking moment that you have. We all do. And Donald Trump will have been thinking about this. I'm going to be the next president of the United States. He was thinking about it in 2016. The idea that he hasn't thought about it is just wrong. He has thought about it. And so the next thing that came around is when markets collapsed last week, after Liberation Day, everyone was like, he's going to backtrack. And, he's been thinking about this for years. He's had 2 days to make it work. There's no way he's going to backtrack after 2 days. He's just not going to do that, because this is a process that, if it's going to work, we're not going to know for at least another year. And the main purpose behind this is to get factories to rebase in the United States. And if you use the example of Jaguar Land Rover, which exports a lot of cars from the UK to America, it's suspended its exports to the USA for a month on Friday while it decides what's going on and how best to deal with it. Now, Jaguar Land Rover now has 3 choices. It can either not sell into the US, and given the size of the US markets, that would be an insane decision, but it's a possibility. And meanwhile, by the way, there's this sort of arms race to be the winner in the self-driving vehicle battle. And I wrote an article about Tesla a few weeks ago, and having just been in a self-driving Tesla, which I thought was fantastic. And a lot of people in the comments said, no, the Jaguars are better. So there's an arms race to get the network effect, to be the VHS rather than the Betamax of self-driving cars, if you see what I mean, to be the CD rather than the mini disc player. And Jaguar is not going to want to lose out in that arms race, particularly while, because Tesla has a much bigger network effect. So Jaguar also has the choice of paying a 25% tariff, or has the choice of relocating its factories from the UK to the USA. Now, I think Jaguar, judging by its recent ad campaigns, it went full woke and it had a lot of criticism for it. Its management is probably on the other side of the culture war to Donald Trump. Its management shouldn't be in the culture war at all. It's a business, but nevertheless, we can infer that. So it may not want to do what Donald Trump wants it to do, which is relocate to the UK, to the US. But it has that decision. What does it do? And it's not a decision it's going to make overnight. It's going to, they're going to have meetings. They're going to discuss strategies. They're going to look at the economics of it. They're going to put all loads of data in spreadsheets and work out which is the best business model. So it's going to take maybe a year before, it'll take quicker than that before it makes the decision, but it'll take at least a year before it starts finding ground to make the factories, working out where in the US to have the factories, getting all the planning permits, hiring all the staff, doing all that. It's a long process. This is not the digital economy, it's the physical economy that we're talking about. So the idea that Donald Trump's going to backtrack on this after 2 days is insane. This process is going to take 2 years maybe before we know whether it's going to work or not. But in any case, that was my main logic was, 1, Trump's not going to back down. Tariffs are here to stay. 2, therefore, it doesn't matter whether you think they're good or bad, they are here to stay. And like everyone, I'm sure yours was the same. My portfolio took an absolute battering last week. And so I looked at myself and I thought, I've got to understand what this is about so I can understand what the strategy is, and then I can and look at the implications, and then I can decide how best to allocate my portfolio. So that was the thinking behind the article and the reason I wrote the article with that focus in mind.
Hey everybody, let's take a minute to thank our sponsor, Persist SEO. If you're getting buried by your competition online, then build your brand, your reputation, and your lead flow with digital marketing by Persist SEO. If you're a small local business trying to compete against large companies in the service industry, then increase your visibility with Persist SEO. What if you have low or no leads coming in on a consistent basis? Well, then website search engine and conversion optimization can help move the needle to a more prosperous business model for you. Are you tired of cold calling and networking? Use your website as a lead generation engine. What if you're not showing up for your services in the search engines? Well, get found with Persist SEO Expert Search Engine Optimization. All you have to do is call 770-580-3736 or visit them at ineedseo.help for a free website audit and consultation. That's 770-580-3736 or ineedseo.help. When people say he hasn't thought it through, I don't think they mean he hasn't thought about it. I think they mean some of the implications of it might have escaped him. So let me share an example of this. This is from a post by maybe somebody you know, Saifedean Ammous. He wrote the book, The Bitcoin Standard. Maybe you know him. And so he says this. Well. He says, okay, but he posted something about this saying he was evaluating the claim made by the U.S. Treasury Secretary that the U.S. is in a better position vis-a-vis China, or is in a better position than China is in a situation like this. And Saif disagreed with that, and he said this. He said the problem is China is actually holding the cards. He said because this is him speaking, if the U.S. wants to reindustrialize, it needs access to the best and cheapest steel, electronics, and countless other essential input goods. But China today is the leading producer of so much of these critical inputs. So when the U.S. imposes tariffs on China, it makes it more difficult for American producers to competitively produce most things. For example, China makes more than half the world's ships, the U.S. less than 0.1%. But without Chinese steel, it's going to be very difficult for shipbuilding to take off in the U.S. China produces more than half the world's steel, and you're more likely to find the exact steel you want at the price you can afford in China than elsewhere. So for the foreseeable future, American industries are stuck paying tariffs on Chinese steel and on Chinese ships. And the longer they have to pay tariffs on Chinese steel, the harder it is for them to build competitive ships. This is but one example, but modern supply chains are so international and complex, there are many more. And that's been a concern of mine too, is that sometimes when you talk to people about tariffs, they think the only downside is that consumer prices might rise. And their response to that, as one of their responses is in your article, that, well, they might not rise as much as you think. Or secondly, they openly mock the idea of low prices. I'm seeing that among a lot of Trump people. You just want your cheap Chinese junk. Now, I'm telling you, Dom, if you want to promote a policy that is going to produce a lot of short-term pain, I would not make as one of my rhetorical go-tos in this, mocking people's concern for their own material well-being.
Well, I agree. And that's a mistake. And I don't disagree with a word that Saifedean said just there, by the way. And there's this sort of thing that America has all the cards, China has all the cards. They've both got a lot of cards. They're both huge markets. And, you know, in some areas, maybe America's got the edge, and in some other areas, China's got the edge. And China, by the way, as well as being the world's biggest producer of most raw materials, particularly metals, it's also the world's biggest importer. And that's because China is the factory of the world. And so if you take copper, I'm not sure about Chinese copper production, but take gold, for example. You know, it's the world's biggest producer of gold. It's also the world's biggest importer of gold. And that applies to a great many other metals, particularly strategic ones. So, yeah, that's a problem. The other problem that America has is it's much more expensive to employ someone in the United States than it is in China. This is one of the reasons that so much business went to China in the first place. This is because of very protective employment laws that look after the worker and unions. And not only do they have to pay American workers higher salaries, but there's also a much higher cost of government added to those salaries and all the various, Medicare and Medicaid and all that kind of thing that you have to pay. So it's very, very difficult for America to be competitive. Now, there's the other area which I would sort of add to what you said about Trump not thinking this through it's the law of unintended consequences. And so many government policies, you only look at the policy itself. You don't look at the wider implications and the opportunity costs and the unforeseen effects. And the most relevant example I can think of, and this is a historical example, and I haven't heard anyone talking about it to any great extent. Everyone's talked about the American tariffs of 1930 and the tariffs of 1828, but tariffs began in the United States in 1816, and it was because of the War of 1812 with the British, which was a war that lasted 3 years, and America was woefully underprepared for that war, and it was totally dependent on British industrial goods. And when the war ended, it only really ended because the British lost interest because they were involved in the Napoleonic Wars on the continent. America looked at itself and it said, we need to make sure this can't happen again because we were underprepared. We need to invest in our own industry and make sure we're not overly dependent on British industrial goods. And so it introduced these tariffs in order to protect its own industry. Now, what ended up happening is this was the Dallas tariff of 1816, 1820, and all the southern states agreed to this, by the way, because they saw, and they put their own interests. They were the biggest importers, so they were paying the large majority of the tariffs. But they were like, no, this is an emergency. We need to do this. But 1820 came along and the emergency had passed and now northern industry is doing very well. But all those northern industries that had benefited from the tariffs, which were effectively a subsidy, they turned around and said, no, we want more tariffs. And it failed to get through by one vote. One vote. And so they went away. But then the tariff then came back in 1828 and there was even more draconian tariffs. And one thing led to another. And in my book, Daylight Robbery, I make this argument that it was tariffs and the excess taxes that the southern states had to pay that above anything else, any other single thing, were the reason that so many southern states wanted secession by the time 1860 came along, and that was the moral tariff of 1860. And so, the unintended consequence of those lowly tariffs introduced in 1816, one of them was the American Civil War, or a big factor in the American Civil War, and however many millions of people have died. Now, I'm sure Donald Trump hasn't extrapolated, well, what happens in 45 years' time from these tariffs? He's just looking at the next, 4 years or something. So in that sense, I don't believe he has thought it through, or he accepts that this is going to be somebody else's problem 4 years from now. But in the short term, he sees tariffs as the way to bully the world into reindustrializing in America. And you could say it's mad, you can say it's good. It doesn't make any difference because tariffs are a reality and they're not going anywhere.
The issue that he's going to face,
I'm not sure it is going to work, by the way.
Right. I mean, we'll see. And it's only partially clear exactly what it is that he wants, because people will say for him that what he wants is for other countries to knock down their own tariffs, but also so-called non-tariff barriers. But then when he's hearing proposals to do exactly that, he's saying, well, that's not enough. Or what he's hearing is, we'll give you zero tariffs. He's saying that's not enough. I don't want any trade deficit with you. But that's not, if we all lived our lives that way, they would be very sad lives. If I had no trade deficit with anybody I do business with, this would be ridiculous. So I don't exactly know at what point he'll take yes for an answer. But what I do know is that he's got midterm elections coming up when Congress is up for re-election and a third of the Senate next year.
When is that?
That's November of next year. So what year are we in? So
2026.
So 2026 November. So this stuff has to deliver. He doesn't have 2 years. Now, he does in the sense that he can't run for office again and he's going to have to retire after this, so it's not really his problem. But presumably he doesn't want all of this to be reversed 5 minutes after he leaves office. He presumably wants to leave a legacy. So he needs this to have results. And it's going to have to produce results to make quickly. It work. Yeah. And I think part of that is going to have to be, if that is going to happen, it's going to happen in the form of countries just flat out capitulating to him. And maybe that happens. I don't know.
Well, we know what a champion of the Rust Belt he is. And we know he's got a huge and loyal voter base there. And I think I listened to an interview with Scott Bessent the other day talking to Tucker Carlson. I think Scott Bessent is great, by the way. And Bessent was sort of reiterating what Trump had said, which is that the American coasts have done very well over the last 40 or 50 years, whether it's Seattle or San Francisco, with tech, or New York with Wall Street. And he sort of wants, the idea is that we need to focus on Main Street rather than Wall Street. And if that means Wall Street taking a short-term hit, well, so be it. Main Street's more important. And now, there's, like you say, when I say take a hit, he's probably got till maybe next winter to get this working. November, December, January 2026, February 2026. He's got to have it clearly working by then. Otherwise, he's in big, big trouble. But here's a stat which I found really compelling. It's an amazing statistic. I read it on The Fool, but The Fool had taken it from the Fed. So it's an actual government statistic. The richest 1% of Americans, just the richest 1%, own 50% of US stocks. 50% of US stocks owned by 1%. And if you extrapolate that to the top 10% richest Americans, that group holds 87% of stocks. And then you go the other way and you go the bottom 50%, the poorest 50% of US adults own just 1% of stocks. So 1% own 50% and 50% own 1%. Now that's a really important statistic, not only because it demonstrates the incredible wealth divides that you see in the United States, but more importantly, because what Trump is doing with his tariffs and his attempt to reindustrialize America, it's focused on the American working classes, the poorest 50%. And, there's a big voter base there, but they're not going to mind that much if Wall Street crashes, because they're not that exposed to it in the way that the top 1 or 10% are. So that gives him a little bit of leeway. And it also means,
how much are they may not own the stocks personally, but how much are they exposed to it in their retirement accounts? I don't know.
I don't know the answer to that, but I presume that statistic includes everyone's pensions and retirement accounts and all the rest of it. I can only presume that.
I'd like you to come to the U.S. Virgin Islands with me, and no, not aboard a cruise. For 2 years, I've run the Tom Woods Elite Mastermind, where smart and ambitious people help each other maximize their business success. Forget the vague generalities and the fortune cookie maxims you get in business books. Here, you'll get ideas and strategies designed specifically for you. My own success has been dramatically increased when smart people who knew my specific situation told me, do this specific thing. We meet in person 3 times a year, always in an exciting place, and one of our meetings in the coming year will take place in St. John in the U.S. Virgin Islands. We'll sail around paradise as we help each other reach that next level in our businesses. And a certain magician who fooled Penn and Teller on their TV show will be there to do close-up magic just for our small group. If that sounds awesome, that's because it obviously is. If you want in, head over to woodsmastermind.com and let's talk. woodsmastermind.com. Yeah, I don't know. Because that does matter. That after a while, it's fun to.
But even so, it doesn't change it by that much.
Well, also because they don't view it.
Because this is a policy for Main Street, and Main Street is not as exposed to Wall Street as Wall Street is.
And also, you could argue that
for now, Wall Street can take a hit.
Yeah, and also you could argue I'm not going to retire for 30 more years, so I'm sure this will all be resolved by then. So it's not as immediately pressing for them, let's say, as it is for somebody who has his own personal, extensive stock portfolio, for sure.
So his plan for now isn't to boost the stock market, it's to reset the economy. The economy and the stock market aren't the same thing. They often reflect each other, but they're not the same thing. Like, the stock market's done great for the last 30 or 40 years, but, say that to, some working class guy in Kentucky or something, they may not feel the same way. The other point is that at the national level, America is caught in a vicious spiral. And so you've got 36 trillion in debt at the moment, and you'll spend 6 trillion this year, and you'll only take in 4 trillion in revenue. So that means another 2 trillion of borrowing, which means another 2 trillion added to the US debt, which is going to be 38 trillion. Elon Musk and his Doge plan says he's going to get the deficit down by 1 trillion by making the government more efficient. We'll see if that happens or not, but that's his plan. So that reduces 1 trillion. The tariff plan, and all these things are easy to say on a spreadsheet, they may not happen, but the tariff plan is to raise another 500 billion in revenue. So that just leaves, assuming both those plans work, just 500 billion in revenue to make up. And then you've got his citizenship plan, which he's talked about. Now, apparently 1 million people, that's when he's selling US residency for $5 million. Now, apparently 1 million, this is according to AI, Grok. I said, how many people can realistically afford $5 million to get a US residency? So that doesn't mean how many people have got $5 million. It means how many people can afford $5 million. So to afford $5 million, how rich do you need to be? 100 million or something like that? I guess those kind of levels. Anyway, it says that 1 million people worldwide could afford it. That's what Grok said. So let's just say 10% of them, just for the sake of argument, bought US residency for $5 million. That's another 500 billion in revenue. And suddenly, between the citizenship plan, the Doge plan, and the tariff plan, suddenly the US is no longer running a deficit, it's running a surplus. And so I'm not saying this is going to work. I'm just saying it's what Besant sort of talked about and what others have talked about. So suddenly, when it's running a surplus, suddenly it's borrowing less, the cost of its debt starts to come down, and trade will increase. It's in a position where it can reduce taxes. When it reduces taxes, the economy grows. That's the golden rule of daylight robbery, my book on taxation. Lower taxes lead to greater revenue, or lower tax rates. He can lower corporation tax. Suddenly he can, to 15% or something, make the US a very attractive place for corporations and who are paying 20 or 30% in Europe, for example. And suddenly you're in a virtuous cycle from a vicious cycle. But, how long have they got to make this work? 9 months, a year maybe? But I'm sure that's another purpose behind these tariffs.
Yeah, I mean, I've just been through so many of these promises of we're gonna get rid of the deficit that I'm a little bit, I'm skeptical of some of these.
I've heard it many times myself, Tom, and
But our point in this conversation is
this time it feels like they're more focused. With Elon Musk, right. This time it feels like they're more focused than they have been in the past. It's always just been jaw-burning in the past, and now it feels like maybe they actually mean it. But yeah, like you say, I'll believe it when I see it.
One aspect of this, he's got to have, as he promised earlier on, he's got to implement policies that can help promote cheap energy. In part because he thinks that since energy goes into the production of everything, that cheaper energy will mean what it'll mean is a greater abundance, greater production, which will put downward pressure on prices because of the increased supply. Because they're never going to say on the campaign trail, we're going to crack down on price inflation by getting a Paul Volcker into the Fed. That's not going to happen. So since we're not going to do anything about the supply of dollars, we'll see what we can do to increase the supply of goods. And that seems to have been his one of his talking points. So and I think he is on track. He is trying to do that. And right now, oil prices are actually down quite low, and that somewhat fortuitously.
Yeah, they've cratered. He needs 3 things to make his plan work on the ground. And one of them is cheap energy. He needs a cheaper dollar and he needs cheaper debt. But we'll come to the second 2 in a moment. Let's just talk about cheap energy. Now, obviously, the oil price now is trading around $60 a barrel, and it's come down from above $70 a barrel. So he's already shaved, 15% or so off the oil price. Obviously, the oil price fluctuates, so it's not here to stay. But he's got to be really careful, because if energy becomes too cheap, he puts all the shale producers out of business. So he needs to keep those guys in business. If oil goes to $40 a barrel or something, all those guys go out of business. And all that drill, baby, nobody's going to drill for anything. Why would you drill for anything at $40 a barrel oil? So, and if this turns into a full-on depression, we could see $40 a barrel oil. Remember, oil went negative only 4 years ago. So it can happen. But, so I think he needs cheap energy, but not that cheap, if that makes sense. Yeah, I think $55 a barrel, $60 a barrel, that's okay. But $40, $35, and that's not sustainable.
I know we're not supposed to talk about the stock market because well, in the sense that, as you said, this is something only the rich care about, and how can you be so heartless when we're trying to help Main Street and all that? Okay, but you know what, I'm interested in it because because I would have no reason to gratuitously want the stock market to fail, and I think the cavalier attitude toward it's no big deal, it's just a bunch of rich fat cats. That's just not that I have. That's not any movement I want to be part of that talks that way. So I am interested in it, and again, you were talking about my portfolio. When it comes to stocks, I don't really have one. I have other ways that I intend to make money in the future. If the only way that I'm in the markets is through options, and that's just selling. I don't buy anything. I'm not going to buy a call or buy a put. I sell them, and I sell them on good quality stocks that meet certain technical requirements, and that means that I can be okay if the markets go sideways or up or down, as long as I keep to my my strategy, I'm okay. That doesn't really affect me. I don't have to look and say, oh, doggone it, this stock of mine went down by 50%. That's not my concern. I haven't got a portfolio like that. But what do you recommend to people? You have a little discussion of this, because the question is, what would be the kinds of stocks that would somehow be immune-ish to these kinds of issues? And we emphasize that this is not investment advice, blah 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 blah, whatever we're required to say to stay out of prison. But what are your insights about this?
Well, just to come back to your earlier point there, I don't think I'm saying Trump doesn't care about the stock market, because at the end of the day,
no, not that he doesn't, but I'm watching his followers on social media. They don't. They've made that amply clear. They don't.
I would just say that temporarily, it is not his number one priority.
Yeah,
he will want to get the stock market back up because it's a measure. But for now, his other stuff's more important. And in fact, getting bond yields down and the cost of debt down is more important to him, because it's making it cheaper to borrow, because that's another goose for investment. But so the equity markets are important, just not top priority for now. But yeah, the other thing I would say about stocks, before I sort of answer your question, is that according to the Schiller PE index, which is a measure of valuations, stock markets, US equities were at the richest they've been. Only 2 other times in history were they richer, and one was 2007 and the other was 2000. They were very, very expensive. And that little sort of bubble needed a prick in it. If it hadn't been Donald Trump's tariffs, it would have been something else, because they needed to come back down to earth. And so, like all these things, Donald Trump pricked the bubble, but the bubble was already there long before he got elected. And so it's better to get that correction out of the way in the first year than it is in the second or third year. So that's another factor.
Yeah.
And so, but a full-on crash like we saw last week, where, the S&P's losing 4% in a day, that kind of volatility is insane. And he won't want that. But a sort of bear market for 9 months is tolerable. Now, in a situation like we saw Thursday or Friday last week, it doesn't matter what you own. It doesn't matter if your business is totally based in the US, in the middle of the US, miles from any border, miles from any tariff, making stuff in the US and selling to US customers. It still sold off last week because it was a market panic. and everyone threw the baby out with the bathwater. And that's what happens when everyone's in a panic. Nothing was immune. Copper took a massive hit. Oil took a massive hit. Japanese stocks, British stocks. I got some stock in an estate agent in London that deals with the lettings market in London. It's got nothing to do with anything. And the stock was off 15% last week. I've got another stock that deals in North Sea oil. It's got I suppose it's leave it to the oil price. It was off 20% last week. I've got another stock it's a gold mining company in Canada. And, it's mining for gold. And gold's doing really well. It was off 15, 20%. So everything was getting hit. What would I recommend buying now? I've got to say, I've gone uber defensive. I've raised a massive amount of cash, and I'm just looking at this, and I have a slight look of shock and horror on my face because I'm not quite sure where to go. But if you can find cash-generating US businesses, that has to be a good plan. So I've got one company, for example, that I recommended to readers, which is it used to be a gold and silver miner in Nevada, and it still has the gold and silver mining assets. But it's also got shed loads of real estate in Nevada that is worth more than its market cap, and that's data center country. Now, there has to be data centers in the US. There has to be a demand for data centers in the US now, reshoring of those, particularly with cheap energy. But then it also has a recycling business where it takes in solar panels from California that are coming into the end of their shelf life. And now these solar panels can't be, there's no landfill in California, so it sends them to Nevada, gets paid to take in the solar panels, and then it recycles them and produces aluminium and glass and silver, and then it sells those. So it's a very profitable business. It needs a little bit of investment to get its factories up and running. Now, a business like that is in America, for America, doing physical things, something like that has to be a very good business model for the times, I would have thought.
Yeah, that makes sense. But you're right that at the beginning, things that didn't seem to have anything to do with anything took a hit. But I think that's probably just because of general panic. But once the dust clears and clearer heads prevail, obviously you would start to see that some sectors get hit harder than others. Are there particular sectors that you would say, well, absolutely not, I have to stay out of this for a year?
Well, yeah, tariffs, they're a very simple tax to levy, and they're a very simple tax in theory, but they do not affect everyone equally. They really don't. And so people that are involved in manufacturing that involves large amounts of imports of raw materials, they're going to have to rethink their business. And it might be that the price of their raw materials goes up because they're having to buy raw materials that are produced in the US, which maybe won't be as good. That's what happened in the 19th century with the tariffs in the lead up to the Civil War. But, I'm always saying gold mining, but if gold stays above $3,000, gold mining and energy costs come down, then there is no excuse for gold mining not to do well, particularly gold miners based in North America. I mean, there's a big if gold stays above 3,000. It looks a bit wobbly at the moment, but there's no reason why it shouldn't, particularly as, Trump wants the dollar lower, so that should help gold. And, the reason that gold miners have been so crappy is that their input costs have, even though the gold price has gone up, their input costs, particularly the cost of energy, have gone up by even more, and inflation and machinery and so on. But if its biggest input cost is energy, if the cost of energy goes down, then North American mining, or specifically United States mining anything, even copper or any kind of raw material, has to be a business that does well, because suddenly there's going to be a market within the United States for its product. It's going to benefit directly from the tariffs on metals, on imported metals, and its energy costs are going to come down. It has to be a good business. But tipping mining is a risky game, because I've tipped mining many times and I've watched it do incredibly well, and I've also watched it go tits up.
There's been a pullback in Bitcoin to the 70s range. Now, again, Bitcoin is one of these things where a few years ago, it being in the 70s range at all would have been a miracle. Everyone would have been dancing a jig, and now it's, oh, darn, it's back down to the 70s. Do you have any sense of where that's going?
Well, it's traded pretty much in lockstep with the equity markets. And Bitcoin is, I love Bitcoin. I wrote a book about it. I will defend Bitcoin in any argument. But one thing Bitcoin isn't is a safe haven asset. It's a speculative asset. It's a risk-on asset. It's extremely volatile. Obviously, if you just buy Bitcoin and forget about it and hold through all the volatility, then it becomes a safe asset. And there's been no asset that's done anything like as well over the last 10 or 15 years. But it is volatile. And, gold is a safe haven asset. Bitcoin isn't. But Bitcoin is the most technologically brilliant form of money that has ever been invented. Money evolves as technology evolves. If you're selling your Bitcoin, you are selling it for a technologically inferior form of money. So anyone who owns Bitcoin, I urge them to hold it. And particularly, I'm not advocating doing this, but if you want to send Bitcoin across borders, you can do that and you don't have to pay tariffs.
Well, there is that. There is that, I suppose. You have to, with something like Bitcoin, you have to be in a position where you just don't need it for X number of years.
Yeah.
Where you can legitimately say, I can survive if I don't touch this for 5 years or 10 years, I will be okay. If you can't say that to yourself, then that's money you shouldn't be putting in Bitcoin. You should put in something more liquid that you wouldn't mind liquidating sooner. But if you are willing to do that, it can indeed, generate good results as it has for me. But I'm lucky that I can live without it for the time being.
Yeah. I agree. The same goes for any investment. Position size is everything. It really is. And if you need the money, you're best off not over-levering yourself to the investment, because it might be that the markets go down 50% before they go up. The other thing is, we talked about this last time I was on your show, Tom, is that, this audit of US gold is coming up. And if it turns out that the US gold isn't actually there, and there is a possibility of that, then the fact that America has embraced Bitcoin and has a national strategic reserve, Bitcoin almost saves the US finances, because America can just go, oh, well, gold's an antiquated asset. We've got Bitcoin now. So I'm bullish on both.
I heard of people who, when the markets opened on one of the days following all this, said, I'm just going to sell everything. I'm just going to sell absolutely everything in my entire portfolio. And part of you thinks, well, that's just a reactionary attitude. But on the other hand, if it's going to continue to go down, then you can always get right back into those positions way cheaper. You can just get back in at the lower prices. So maybe the guy who sells everything is right.
The golden rule of panicking is to panic first and panic early.
I guess so.
It's an emotional decision. And, I wish I'd sold everything 2 months ago. And investing is easy in hindsight.
Yeah.
And my overall outlook is, we're in a downtrend now. I don't think we've hit the bottom yet. I think we're going to see huge up days and huge down days, and there's going to be a lot of volatility. And as we go through this volatility, we will start to see trends emerge, and you will see the market quietly working out which industries are going to do well out of all this and which aren't. Markets like certainty, and Trump likes dealing in uncertainty, and there's a lot of uncertainty about at the moment. And still, a lot of people are saying this is going to happen, this is going to happen. Nobody really knows how this is going to pan out. Trump's supporters are saying it's going to work. Trump's enemies are saying it isn't going to work. We don't know. It might work a little bit. It might work for a little while. We don't know. But I think, Trump is a clown. He's a showman, but he's also a clown, and he can't resist a gag. And because he's a clown, people think he's stupid. But clowns are clever. They really are. And so just because he can't resist his gags, it's easy to just go, orange man stupid. He's not stupid. He will have thought this through. And he knows there's going to be a price to pay while America refines its feet. And that price, what he wants to do, has to be done now. There isn't room for it to be done later in the presidency, because there won't be the time, there won't be the support. And I think we'll know by the autumn whether it's working or not. And I'm going to give the Trump the benefit of the doubt and say I think it will work. But I think in terms of equities, I think we're in a bear market now, and we'll probably be in a bear market for the next 6 or 9 months. It's a bear market that's long overdue. We haven't had a bear market for a while. Like I say, there's going to be a lot of volatility, a lot of up days, a lot of down days. But gradually you'll see, if I'm right, for example, about United States mining, Arizona copper companies, things like that. You might just see them breaking the trend and just going on their own little trajectory and rising up. But the bottom line is, this is America we're talking about. It still is just the greatest country in the world. It's full of the most brilliant people. It's an enormous market. And everything America does is on a scale that dwarfs the rest of the world. And you've got a guy who is a businessman in charge, and his number one advisor is in the Treasury. His Treasury Secretary is not a technocrat either. He's a former hedge fund manager. He's got Elon Musk, who's another businessman in there. They don't think like technocrats like we've got in Europe. They don't. They call it like it is, and what they're doing. I don't buy all these accusations is for their own self-enrichment. They see what they're doing as the way to save America and make it great again. And America really is a great country, and you're very lucky to live there and to be a citizen when you compare it to where the leadership we have in Western Europe at the moment, in the UK, and what's going on over here. And, I think about what a country this was 130 years ago and what it is now. And, when I walk down the street and I just see the litter and then this and that, you just go, what has happened to this place? So you're very lucky to be in America now. I say that to all your listeners. You've got a great country there, and you've got a bit of volatility to ride through, but ultimately, I think America comes out of this stronger and bigger and greater than ever.
Wow. Well, that's a very, very interesting conclusion. Theflyingfrisbee.com. Now, Frisbee, Frisby, not like the flying disc. Theflyingfrisbee.com is where you can go to read what Dom has to say about these things. Is that the primary link you want to share?
Yeah, that would be great. And I'd love it. It's free to sign up to my newsletter. There's a paid option you can take if you want it, but you can get the letter for free. You get a free guide to how to invest in gold. You'll get my thoughts, lots of videos, lots of articles. And hopefully I'll entertain you as well as inform you on your investment and your philosophical journey.
Well, I'm heading over to London the week of May 4th, and this time I'm keeping my theater tickets, Dom. But I've got my daughter who's just on the verge of turning 22, actually, with me, and I'd love to invite you out for lunch and catch up and see what's going on.
That'd be great. I'll bring one of my daughters with me, and they can meet.
Oh, good. Then you and I can talk about nerd things, and they can be normal people.
Yeah.
Great.
Perfect.
All right. Theflyingfrisbee.com. Yeah, .com. Theflyingfrisbee.com.
And Frisbee just means, by the way, it just means village of the people from the Frisian Islands, if you're wondering what that name means.
I think Frisian we covered this on a previous episode. I forgot.
Okay, sorry.
Okay, yeah, I forgot about that. So theflyingfrisbee.com, go check that out. Dom, thanks so much. And thank you, ladies and gentlemen.
Make yourself and those you love less vulnerable to the regime, both mentally and physically. Get more forbidden information at tomsfreebooks.com, and be sure to subscribe to the show wherever you listen. See you next time.
Like the sound of The Tom Woods Show? My audio production is provided by Podsworth Media. Check them out at podsworth.com.